Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Institutional interest in the crypto market remains resilient, and joining me to discuss is Sui Chung, is the CEO of CF Benchmarks. Sui, it's great to see you again. Welcome back to Trade Talks.
Thank you very much for having me. It's great to see you again too, Jill.
From your perspective, what does the institutional interest in crypto look like currently, and how has this shifted during the bear market, if at all?
Yeah, we're seeing pretty strong institutional interest. Probably the best way to measure that is to see the open interest in futures contracts listed on the CME for Bitcoin and Ether. These contracts, of course, settle to CF Benchmarks indices. And what we're seeing is that the Bitcoin contract is open interest is back at about 14,500 contracts. Now that's a little bit off, about 10% off its all-time highs set in late 2021, about this time last year. But that is recovered from about 10,000 contracts in the sort of April period, where we had the first of a series of the rate hikes from the Fed. And so that institutional interest, which had dropped off, I guess, across the board in that period when the Fed rate hikes kicked in, is definitely now back in the crypto markets. So the CME futures definitely a place where we can see that very clearly. And I think another area that we've seen is the asset management industry. Some of the big names of the asset management industry have launched their first crypto funds. Probably foremost in that is BlackRock, who launched their institutional Bitcoin trust just about 6 weeks ago, and I'm very glad to say that is a fund whose NAV, whose net asset value, is calculated using a CFB benchmark. So we're very proud of that.
Tell us what's going on with Bitcoin price movements, or the lack thereof. Why haven't we seen Bitcoin respond to the recent Fed rate hike?
Now that's a really interesting question, Jill, and I'm glad you brought it up, because what we saw with Bitcoin was that Bitcoin effectively reacted almost instantaneously to the change in the market regime, in the interest rate outlook, and did that in a period of about 4 or 5 weeks. Fell from about $47,000 in early March, mid-March, all the way down to $18,000. It hit $18,000 by August, and so that's a pretty precipitous fall in a very short period of time. And what we've seen is that the traditional markets, the equity markets, the fixed income markets, are trending south. They're sort of catching up with Bitcoin, but with volatility, heightened volatility over the entire period from that April time to now. So that's really interesting that I guess because of the 24/7 nature of cryptocurrency markets, 24/7 nature of the trading, of the settlements, it just reacts. It seems to react much, much more quickly to these changes in market regime, because what we've seen since that August low is that Bitcoin has basically trended sideways. Volatility is very subdued, whereas obviously in traditional markets we're still seeing very heightened volatility.
And finally, Sui, what's new from CF Benchmarks? Any updates to share, or future announcements we should be aware of?
Well, we continue to be very busy here at CFB. As some of your viewers will know, we recently launched a series of benchmarks against assets into our CME CF reference rate family. So we've expanded the coverage there with our partners at CME, and we've also recently launched our initial interest rate curve, our first ever interest rate benchmark for cryptocurrencies through our Bitcoin interest rate curve. And so this is the first replicable market-wide reference for Bitcoin interest rates, or implied Bitcoin interest rates, of course. And that's, we're very excited by that and the developments that could have for products that will allow traders, market participants, investors to potentially hedge or even indeed fix their interest rate liabilities when they're borrowing and lending in Bitcoin.
All right. So we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you very much, Jill.